Hello everybody. Okay, thank you for watching. Now, I want to take the time here to explain what capital gains are. A capital gain basically means money that you've invested and it's increased. So the money that you have gained in profit will be taxed. For instance, if you have a home that you bought for, let's say, about $100,000, and later on, that home in 5, 7 years later, um, you decide to sell it, and at that time it's worth $300,000. Remember again, you invested $100,000 and you sold for $300,000. You now have a capital gains of $200,000 in profit. So again, that profit is called a capital gain. And that profit you will have to pay taxes on. Now, when you're earning money from work, you do have to pay taxes on that, and that's called an income tax because you are gaining money through work. For capital gains, you're not working for that money, you're investing that money, and it is increasing. Hopefully it's increasing over time, and then that profit is then taxed on. Now, the IRS has a special exemption for home sales. And that special rule is, for instance, if you're living in that home for, let's say, in a 5-year time span, you've lived there for the first year, and then the second, third, and fourth year, you've rented it out to a different person, and then you've moved back into that home on the 5th year. Those 2 years out of the 5 that you've lived there and it will be counted as home exemption because you have lived there out of the 2 of the 5 years. And so that profit that you've earned through selling the home will be tax exempt. And that is called a home exemption. Capital gains home exemption. So it's because you've lived there 2 out of 5 years. Again, it doesn't matter what 2 years you've lived there. Let's say you bought a home, you've had renters there for the first, second, and third year, and you've moved in there for the 4th and 5th year, you will still get a tax exemption on the capital gains for selling that home. Now, if you never lived there at all, and you've only had renters, then you have to pay taxes on that capital gain. So it could be anywhere from 20 to 25%. So it's a lot of money. And keep in mind, if you're single and you sell a home, you have up to $250,000 of capital gains home sales tax exemption. So you invested again $100,000 in a house, and it's gone up to $400,000, and now you've profited $300,000 from that sale. The first $250,000 will not be taxed. The remaining $50,000 will be taxed. So suppose if you are married and you bought a house, it's the same idea. You've lived there 2 out of the 5 years. You have up to a $500,000 capital gains home sales tax exemption. That's really nice. You get up to $500,000 without being taxed. So again, if you bought a home for $100,000 and then you've sold it for $600,000 with a profit of $500,000, you won't get taxed on that because you are a married couple. I hope that clarifies things. Please let me know if you have any questions. Take care. Bye-bye.